Welcome to this Spokane housing market update. It's December 2022 and this year has been a slow motion car crash as far as the housing market is concerned, and as ever there is no clear consensus on what direction the housing market will take next, so it's time to check in and see what's actually happening with the housing market both nationally and locally here in Spokane. My name is Phil Wells. I'm a real estate agent that likes to keep up to date with the market, and I want you to be as informed as possible too. In this video, we're going to start by getting a national picture of what's happening by looking at national pending home sales. We'll look at mortgage rates as well as mortgage application rates. We'll then compare what's happening nationally with what's happening locally here in Spokane. We'll then move on to look at some real estate and macroeconomic news that stood out to me this month before trying to piece it all together at the end and seeing if we can make sense of the market as it exists right now in December 2022. Before we get started, I wanted to offer a heartfelt thanks for the hundreds and in some cases thousands of people that watch these videos. It's so important to keep up to date with the housing market if you're looking at buying, selling, or investing in the near future. With that in mind, please leave me a comment below on how I can improve these videos. What would you like to see more of? What would you like to see less of? That way I can continue to provide value to you. So let's get into it. Looking first at national pending home sales. Just a note on the figures throughout this entire video, they are the latest figures that I was able to find, but there is often a lag when it comes to reporting figures, particularly at the national level. So for example, we're going to look at national pending home sales now, and these figures are from October 2022. Contract signings were down 4.6% month on month in October 2022, which represents 5 consecutive months of month-on-month declines. Year-over-year contract signings declined 37%, which represents 17 consecutive months of year-over-year sales declines. Last month's pending home sales were down to a 10-year low and were down from last month. So it's accurate to say these are the worst sales figures for over a decade. Where I am in the western region, sales decreased 11.3% month on month, and they declined at 46.2% from the year prior. Those are enormous year-over-year declines. If you are an investor, a cash buyer, or just a regular buyer who's been waiting on the sidelines for the right time to strike, then right now there is a great window of opportunity to come in, get a great deal on the purchase price, and in the future combine that great deal with a great mortgage rate when rates do eventually come back down. Here is what the National Association of Realtors chief economist had to say about the month of October. October was a difficult month for home buyers as they faced 20-year high mortgage rates. The West region in particular suffered from the combination of high interest rates and expensive home prices. Only the Midwest squeaked out a gain. The upcoming months should see a return of buyers as mortgage rates appear to have already peaked and have been coming down since mid-November. That's exactly what I was just referring to. As inflation comes back down, and it is coming down, then the Fed has no reason to keep rates high. When the Fed does eventually drop its funds rate, mortgage rates will come back down too. And the buyers that had their purchasing power wiped out by the Federal Reserve at the start of the year will come roaring back into the market. So there exists a narrow window of opportunity to come in and take advantage of these low purchase prices, and I believe that window will be closed before you know it. Let's move on now and look at mortgage rates. Obviously, the majority of home buyers in the United States are buying with the aid of a mortgage, so keeping an eye on mortgage rates gives us a really good idea of what direction buyer demand is heading in. Mortgage rates are also in a constant state of flux, so by the time you hear about a mortgage rate in the headline, it's already out of date. The best we can do is look at trends, and that's what we'll do right now. Mortgage rates at the start of October were at 6.69%, and by the end of October they had risen to 7.13%. The most recent rates that I could see have dropped dramatically since then to 6.33%. So we are heading in the right direction. As inflation continues to drop, the risk of more Fed funds rate hikes is beginning to look less and less probable, and the market is reacting favorably to that. Only last month we were mulling the idea of rates going up to 8.5%. But now I'm optimistic that the Fed has achieved its goal, or is at least in the process of achieving its goal of combating inflation. And while it may continue to hold rates level, or even continue with small rate hikes, the Fed funds rate will eventually drop, and so too will mortgage rates. So I'll say it again, I really truly believe there is a great window of opportunity right now to buy homes. And don't forget about 2-1 mortgages either. You can get a mortgage rate that's 2% lower than current market rate in the first year, 1% lower in the second year, and market rate in the third year. This does involve buying down the rate, but do you think it's probable that you can get the seller to pay for that buy down in this market? I think it's probable. So you could be enjoying a mortgage with a 4 handle in the first year while you're just sat there waiting for the refinance to come around. All while facing reduced competition right now because there's very few buyers actually in the market. And if you're a cash buyer, then this might be the opportunity that people say they've been waiting for to buy. Sticking with mortgages and looking at mortgage application rates. This is a huge leading indicator for the overall housing market because it doesn't matter if mortgage rates are 1% or 10%. It matters how many purchase applications are actually taking place, how many refinances are taking place, and so on. The Mortgage Bankers Association publishes a survey weekly, so we're able to gauge how applications are shaping up. So let's focus on October's headlines and get a picture of what's been happening. The survey for the week ending October 7th, applications were down 2% week on week. For the week ending October 14th, applications were down again 4.5% week on week. For the week ending October 21st, applications were down 1.7% week on week. For the week ending November 4th, applications were down 0.1% week on week. Rates gained pretty dramatically in October, so you'd expect to see that. But what's happening today as rates have come down some? For the week ending November 25th, here's what the Mortgage Bankers Association had to say. Mortgage rates declined again last week, following bond yields lower. The 30-year fixed mortgage rate decreased to 6.49% and has now fallen 57 basis points over the past 4 weeks. Additionally, mortgage rates for most other loan types declined. The economy here and abroad is weakening, which should lead to slower inflation and allow the Fed to slow the pace of rate hikes. Purchase activity increased slightly after adjusting for the Thanksgiving holiday. The rest is about refinances, and I'm more concerned about purchase applications, so we'll leave it there. So rates in the mid to low 6% range were low enough to tempt some buyers back to the table, but there's certainly not an overwhelming trend towards purchasing again. Looking now at my local market, Spokane. Like I said at the start of this video, I like to look at the national picture first and then compare it to what's happening in Spokane, because Spokane is not an economic island. And if Spokane is behaving differently to how the rest of the country is, then we need to know why. These are actual sales for November, so be mindful that we are comparing closed sales in November with national pending home sales in October. Given that it takes around a month to close a transaction, I would say that it's a fairly accurate comparison, as pending sales in October would likely become closed sales in November. Sales were down 43.7% year over year, which is more pronounced than the national year-over-year decrease of 37%, but is still broadly in line with what's happening nationally. And it's not as bad as the overall Western region's year-over-year sales declines of 46.2%. Median home prices continue to rise on a year-over-year basis and are up 5.3%, but that rate of appreciation is slowing. We had a 6.5% year-over-year increase only last month. True prices have been coming down since their highs in April-May time, when they peaked at $450,000. They currently stand at $395,000. This number is significant because it's exactly where they were this time last month, meaning that if that trend continues, and I mean if prices continue to track level, then we could suggest that prices here in Spokane have stopped falling. If we truly have reached the bottom in prices, then this adds even more credence to what I've been saying. If you are flexible on the type of home you end up in, if equity and building wealth is your goal, not finding the absolute dream home, then get yourself a 2-1 mortgage, have a seller fund the buy downs, and wait to refinance in hopefully the next couple of years, thereby combining your discounted purchase price now with a great mortgage rate in the future. You'll also be avoiding the headache of bidding wars when rates do eventually come back down, because we're still millions of homes short in the US as a whole, and we're tens of thousands of homes short in Spokane. So that inventory shortage hasn't gone away, it's just being masked by high mortgage rates causing low buyer demand. Talking about inventory is up to a 2.1 month supply. But as you can see, supply is measured at current demand levels. So if we had the same transaction volume as last year, we'd be just over a 1-month supply, which illustrates further what I just said, that the low inventory phenomenon isn't over. New listings are down 12.8% year over year, which is what you'd expect. Sellers can sense the market shifting back towards more favourable conditions for them as inflation comes back down and interest rates begin to stop their constant increases. Most are just holding off till spring to reassess the market conditions then. And honestly, unless you absolutely have to sell, this is what I would recommend a lot of people do, if I'm honest. This means that overall, Spokane is tracking what the rest of the nation is doing almost exactly. Spokane isn't an outlier. This means that you can expect macroeconomic news to impact Spokane just the same way as it would impact the rest of the overall housing market. Now I wanted to move on and look at a few news articles that have stood out to me this month. And we'll start with what I believe is the biggest story of the year. As we know, the US entered a recession following 2 consecutive quarters of GDP growth declines. But in the third quarter, the figures suggest that the United States came roaring back with a quarter big enough to make the whole year positive in terms of GDP. Let's of course wait and see what Q4's figures bring to make sure we are completely out of the woods. But this is definitely good news. My principal macroeconomic concern for the last year has been stagflation, whereby the Fed would be forced to pivot away from its battle with inflation towards combating recession instead, thereby leaving inflation in place. In this situation, we would have increasing prices and an economic downturn, which is the definition of stagflation. It looks, and like I said, it's still too early to tell for sure, that the Federal Reserve has averted the risk of stagflation, at least for now, and can really focus on getting inflation under control. It's worth noting that many experts are still predicting a recession in 2023, whether that's a soft landing or a difficult recession. It's still a possibility. Either way, the Fed currently has more time to combat inflation, and inflation was the major driving factor behind high mortgage rates, which is the major factor driving this low buyer demand we're seeing right now. So let's talk about inflation and the need for future Fed funds rate hikes. Inflation in October was at 7.7%, which represents 4 consecutive months of month-on-month declines. 4 months is enough to convince me at least that inflation is trending down. The next set of inflation figures will be released on December 13th, and I'll post those figures in the description to this video. So what about future rate hikes? Last month we talked about the fact that BlackRock, the world's largest asset manager, told the media what they expect to see from the Fed. So let's recap what BlackRock foresees happening. They were quoted as saying that they expect only one more 0.75% increase, and they expect to hear some pivot language in the future. What that means is pivot away from increasing interest rates towards beginning to lower them or taper them off a little. They also anticipate 2 smaller rate hikes before the Fed pauses its rate hikes around the 4.75% mark. A few weeks after that, the Fed chairman was reported as saying that smaller interest rate hikes could happen as early as this month, December. The vice chair of the Federal Reserve, a man called Michael Barr, believes that stepping down the size of the next Fed rate hike to 0.5% instead of 0.75%, quote, makes a lot of sense. He says, and I quote, "We've been moving very, very rapidly into restrictive territory, and now we're closer to where we may need to be in terms of being sufficiently restrictive. I think it makes sense to slow the pace at which we're increasing rates." To me, it sounds like BlackRock's prediction is coming true. Leaving the macroeconomic space behind and looking at a piece of real estate specific news that really stood out to me this month. Online real estate companies' iBuyer programs aren't going so well. If you're not familiar with iBuying, these are algorithms that tell you how much your home is worth, just like Zillow does with their Zestimate, and they'll then offer you a cash offer based on that purchase price. Zillow themselves failed spectacularly with their iBuyer program after they lost billions of dollars doing it, and now Redfin's iBuyer program is next. It just goes to show that algorithms are great in places like the stock market, where all the assets are uniform. But an algorithm can't account for great landscaping, it can't account for bad neighbours, it can't account for the level of fit and finish that you've just put into your home, it can't account for deferred maintenance, and so on and so on. Zillow proved they don't know how to value homes, and now Redfin are proving it too. So my advice, as always, is to use a real estate professional to value your home. Whether that's a real estate agent or an appraiser, get someone who knows what they're talking about in your hyper-local market to come and look at your home to give you an idea of value. Now let's try and piece all this information together and summarize the market as we see it in December 2022. The big news is that the recession appears to have been averted, well, for this year at least, giving the Federal Reserve some breathing room to combat inflation. Mortgage rates remain at the highest level for decades, but it is possible to imagine mortgage rates coming down now in the foreseeable future. Nationally, pending home sales were down massively on a month-on-month and year-over-year basis. In terms of Spokane, sales are down and we still have low inventory. Prices here in Spokane are up on a year-over-year basis, but within that year, the median purchase price has come down $55,000, or 13% since their highs in May. It's also important to note on median home prices that they have been the same for the last 2 months, so have we seen the bottom of the market? In my opinion, the market continues to be very unsettled and very unhappy, but there are clear waters on the horizon. And I'm absolutely convinced that when we get to those calmer waters, and what I mean by calmer waters is inflation around the 2% mark, which means that mortgage rates can come back down to around the 3% mark. When we get there, I believe that buyer demand that's been pent up for the last 12 months is going to be unleashed, and we're going to be back to the bidding wars of 2020 and 2021. And we'll see the return of low inventory once more. Which is why I believe right now is a great window of opportunity to buy a home. So do your own calculations, but you may find that it's more beneficial to offer $30,000 below list at 6.5% rates than it would be to offer $50,000 or $60,000 above list price at a 3% mortgage rate. Also, do your calculations with a 2-1 mortgage. How does that look at a 4.5% rate in the first year and a 5.5% in the second? If you're a seller, know that homes are being sold. People are buying homes out there. But it is going to take you longer to sell your home than it took your friend to sell their home when rates were at 3% and it sold in the first weekend with multiple offers. You will have to prep your home thoroughly before it hits the market, and you'll have to come up with a real strategy that may involve some price drops and may involve concessions relating to rate buy downs. But it is still possible to sell your home. I just sold a home here recently when mortgage rates were higher than they are right now, and we sold that for just $10,000 below the original list price. That's it for this video. I hope you gained from this video. If you did, please like and subscribe. That really does help me out. If you are looking at buying, you're looking at selling, you're looking at investing anywhere in the Spokane area, please give me a call, shoot me a text, send me an email, or send me a direct message on Facebook or Instagram, and I would be honored to work with you. Until the next one, my name is Phil Wells, and thank you for watching.